Good morning. Welcome back to the second day of the GSSB meeting in Amsterdam. I would like, first of all, to open the meeting by taking a look at our agenda for day 2. We have a number of proposals and concepts coming out of the review of the General Disclosures project, which the Secretariat team, the Standards Division team, will be presenting to us over the course of the morning. We have a break scheduled at 10:30 and lunch at 12 o'clock. There is a slight change to our agenda. We'll reopen the public meeting at 1:30 instead of at 1 o'clock, as indicated on the agenda. But we'll be looking briefly at the GSSB work program renewal for the coming years. And then in the afternoon, we have a proposal from the Secretariat for a slight procedural change, and then we'll close the meeting and review any other business at that point. Could I ask the GSSB members if you have anything that you would like to discuss at the AOB session at the end? Has anything arisen that you would like to introduce into the agenda at this point? Okay, I haven't heard any. Michel Wacher, are you on the line as well?
Yes, I'm here, Judy.
Good morning, Michel. I neglected to note yesterday when I made note of the fact that a number of GSSB members had been reappointed by the nominating committee. I had neglected to include Michel Wacher on that list as well, and I'm happy to say that he will be joining us for another term starting at the beginning of 2020. Michel, do you have anything to add to the agenda, just to give you an opportunity to say so?
No, nothing, thank you.
Thank
It's
you.
easier if I get off mute.
Sure. Okay, thank you very much. Okay, well, with that, I think I will turn it over to Sarah Jane Dominic to open up the next session of our substantial discussion.
Thanks, Judy. So the first session we are going to go through this morning before the break is revisions or recommended revisions to GRI 102, which is the general disclosures. As you undoubtedly know, there were 56 disclosures that we looked at making revisions to. What we have really tried to do is rationalize, consolidate, even remove some that we thought no longer fulfilled a fundamental purpose for all organizations to report. And so this slide here is a rearranged, revised list of the general disclosures that the Standards Division is recommending to the GSSB. We have really rationalized what we've now renamed the organizational profile, and we will come on to discussing where some of that consolidation rationalization has taken place. Those that are highlighted in blue are the incorporation of the human rights related disclosures that the Human Rights TC had recommended. But it should also be noted that changes to 102.43, approach to stakeholder engagement, 102.47, list of material topics, etc., and 102.46, process for identifying material topics, also had elements of the human rights disclosures that we incorporated in. I've not highlighted those in blue because there are other revisions that we have made based on the reporting model and other recommendations. So I put that list up there so that you can see that we now have 19 disclosures, and then there are 20 in section 5 in governance. So 39 in total now, which is a somewhat reduced number from 56. And we'll come on to the governance later. So I highlight here the ones that I would like to walk through today and ask the GSSB to provide me with any comments, input, agreement, if that's appropriate, on some of the revisions that I'm recommending. So, unless there are any questions at this point, I will commence with going into the detail. So we saw 10245 revised. We discussed it yesterday in the concept of topic boundary. So what is this trying to achieve versus what we expect an organization to report when it is explaining how it is linked to an impact and where that occurs. So we have taken some time, and I will be very honest that the wording is probably likely to be revised again, but this was an attempt to position something in front of you. So there are some fundamental things that we feel should be identified in this disclosure. So this should explain the scope of the report. And what I mean by that is it's not the same as the entities in the value chain or those that the entity has business relationships with, but it's what we call the organizational entities. And inverted commas, I call them the reporting entities. I haven't at this juncture proposed a definition such as reporting entities, but Part A of the disclosure up there requires an organization to report the organizational entities which are the subject of this report. And that certainly needs guidance to delineate these are the ones that you're reporting about, not the ones you're reporting the impacts about. And then the second one, should say B, so apologies for that, differences between the organizational entities listed in the first disclosure and any entities included in the organization's audited consolidated financial statements or financial information filed on public record. And that is a change to the descriptor we had before, but that now ties in with what we've agreed for tax, that terminology. So I open it up, Judy, to see if there's any discussion.
Okay, GSSB, is there any discussion of this? It seems to me you get the same information. It's simply that instead of asking what's in the financial report and how is it different to what might be in the sustainability report, we're asking for reporters to say what's covered in this sustainability report and what might be the differences between that and the reported financial statements, yes? But in the end, you have exactly the same information as what was previously. Yeah.
Just a question, and remind me if it's covered somewhere else, but and that's not being changed, but it's just talking about a list. So we're not expecting them to kind of indicate any relationship or, what the nature of holding is, or, like an organogram saying. So you can literally just kind of bullet them. Is that okay?
Yeah, the intent wasn't to list any details necessarily about the list of entities, but presumably the legal name of subsidiaries, etc., or, organizations in a certain regional group that they want to report on. But I think it's important to understand if they are excluding anyone, if they're adding anyone compared to their financial reporting, because an assumption is that they report the same, they report on the same entities as they do for their financial reporting, so that you can therefore have a comparison and link back to the financial information, and that will become relevant later with some of the disclosures that we have recommended to remove.
Anyone else? Okay, I don't see any others. Sarah Jane, I think this one you can move on. Oh, sorry, Gustavo. Yes, please.
Hello. Good morning. This disclosure is assumed to be in the organization profile, not in the report content. Could be is moved on from that one.
Yeah, that's an interesting question, Gustavo. So the 102 arguably are part of the reporting. Perhaps they are different from the reporting content, which is the identification of the material topics and the disclosures that relate specifically to those material topics. But everything that is in the organizational profile The objective is to provide you with contextual information such that you can then understand the impacts, the actions, the management approach, the performance data. So that's why we've labeled it organizational profile, but it would have to be in the report or linked to the report somewhere. There needs to be that information reported.
Okay, thank you. I think that probably does it.
Okay, the next disclosure, 1022R, activities, value chain, and business relationships. In the standards division, we did spend a lot of time really looking at the existing disclosures and thinking about what were we trying to achieve with a variety of disclosures that talked about who the organization is, what it does, where it is, but also who it does business with. And this has replaced 6 disclosures. Many of them are now incorporated into here, and I'll come on to 1027 scale of organization in a moment. We have extended this disclosure though, because nowhere previously did we specifically ask about the value chain. We asked about the supply chain, but obviously the value chain captures downstream impacts, and that is becoming very prevalent when we are revising the waste standard. So we're really interested in, well, what happens to the products and packaging, etc., waste when it is sent downstream. So to have this information now contextually at the beginning to say, well, who are your major customers? What types of customers? So we're actually asking about the value chain, and then also other business relationships. So anyone you may be partnering with that isn't a supplier or a customer per se. So we will really look to have organizations identify at a high level their value chain. And so a lot of guidance will be needed to support them in understanding the types of information that they can provide to meet this disclosure. The term value chain does exist, the definition, in the GRI standards at the moment. There are some revisions coming out of the human rights disclosure work, mainly to align it with the OECD definition. So we will incorporate that as well, but there will be a revised definition there. So I think my question to the GSSB is, any comments, input on replacing 6 disclosures with this one? Will it provide sufficient flexibility whilst also requiring sufficient contextual information? And I did say I would go back to 1027. So scale of the organization had revenue, quantity of products, total number of operations, total number of employees. It was very quantitative. But the understanding is that you can provide that number, but unless you provide some supporting information, so you can say, well, I have 1,000 products, but that's a number, but it doesn't really tell me much without some narrative description about what types of products they are. So the only one we have will retain is the total number of operations, but that will be included as guidance. The ones that are financially driven, net revenue, total assets, total capitalization, we've deemed that you can look to financial reporting for that type of information. And total number of employees will be provided in 1028 anyway.
Peter.
Thank you. The change from supply chain to value chain is a change I fully support. It is a significant, a major change. Shouldn't be understated. I can remember this was a big debate in the G4, and it was chosen then to go for supply chain. The value chains are a bigger deal for reporters to deal with. It is an appropriate one, given, as you say, downstream impacts. The 1027 scale of organization, 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 1027 sc I'm going along with the removal of sales and capitalisation. I can recognise that there are complexities depending on the nature of the organisation. We're not just dealing with private sector organisations here. There are government entities, not-for-profits and so on. It gets a bit harder supplying this data. The idea that all this information is publicly available anyway, I think depends on your jurisdiction. I know that in the United States, I think everything that's filed with the Securities and Exchange Commission is publicly available free of charge. In Australia, you have to pay to get access. So if it's a public company that's listed on the stock exchange, yes, the information's in the public arena. If it can be a multi-billion-dollar private company, and you will not get access to their audited financial statements without paying quite substantial fees. Investigative journalists, financial journalists actually find that they can run a bill of $1,000 in a day trying to research a couple of companies in Australia. So it's the information isn't actually always readily available. That said, that's our situation for Australia. I think in most other jurisdictions, that sort of information is accessible free of charge.
Corley.
This may be a small semantic question, but the reference to business relationships, I don't think we're expecting companies to describe each and every business relationship. So I know we're avoiding key words like key and significant and so on, but maybe there's a way to define it better so that there isn't confusion about what we're talking about.
Other comments? Gustavo.
For me, it seems like there are a lot of different things reported in just only one disclosure. I don't know how it's going to be, how to suit to the companies and to the reporter. I don't know. It's like my appreciation. I really don't know how it's going to be. It could be the supply, the chain, the value chain, and business relation could be separated. I don't know. I think it's like too many things before we have a lot of disclosures. So now everything is only in one. So I think that are mixed some things. And thinking about the last one before, about the identifying organizational entities reported, thinking that is going to be located in organization profile could be added like the owners of the companies. In my case, we have a lot of companies that are subsidiaries and different composition. It's like to report downstream and like upstreams in the ownerships. No? I think could be something to think about to add. Only that.
Sarah Jane, do you have any comments or responses to the points that have been raised so far on these?
I would be interested to perhaps do a bit more research about the publicly available and how publicly available the financial information is, and then whether we deem it's appropriate to remove it. So that's one thing that I think would be worthy of looking at. But I think it also has to be in the guise of, well, it's useful information to understand their impacts, and having a revenue number, would that assist if you've already understood where they operate, how they operate, what they produce? So I think that would be something I would like to look at. There was a deliberate effort to consolidate because it felt like, across those we're trying to achieve the same thing with a number of disclosures, which is help us understand who you are, what you do, so that we can then look at your impacts and truly understand whether you have identified the appropriate impacts. So I think this has become very important with the things like the sector standards. We truly understand the nature of the services or products or sectors that you operate in, and then we can have, an idea of where we expect impacts to be.
I mean, it seems like there is a certain principle at stake here around the expectation of availability of basic information about what a company is, does, how it operates, where it operates, how big it is, all that kind of thing. I think it's quite common for many reporters to report the sort of revenues and so forth by reference to their financial disclosures, to say you can find information about these things in this other report over here, which is perfectly fine. But in the case of companies that don't actually provide such publicly available financial disclosures, it's possibly worth just sort of maintaining the principle there that this information is expected to be provided for stakeholders for the sake of transparency and just general understanding of the company. So maybe that's something that maybe does need to be considered here. I would also say we haven't seen. What still needs to be worked out is how this plays out with the guidance that's provided around it. How we frame. You've got sort of 3 sub-disclosures in one disclosure, substituting for previously 6 different disclosures. I think there's a lot to be worked out in that, and I think we might. I think we'll see once we can see that, we can probably get a better sense for whether it does the job. Kent.
Maybe I'm moving a little slow this morning, but don't we still have direct economic impact? Is this something to do with the 201, the 200 series? Because that, I mean, we still ask for revenues and expenses and compensation and things like that, don't we?
Yes, we do right now. I'm not sure how the future will look like around that one, because it is one of the most frequent feedbacks around this particular topic-specific standard that, well, on average people say, well, there are other places where this information is available, but in actual fact what we ended up with now in the discussion is the exact same point. Sometimes it's not, and there is a fair share of the reporting community that reports based on GRI that is just private, and the information is not readily accessible. So a carve-out of some kind where we say if the following information is not available in the public domain and readily accessible, we have to look at what the implications are of accessibility, then report whatever it is. Maybe that is a disclosure that only applies to a subset of organizations then, and that could very well be possible. So we will have a closer look at this. I think one general point is, and that actually extends to all the information that GRI is trying to get into the public domain, there is a very strong trend to commercialize business information across very many jurisdictions, and the most basic information that used to be somehow accessible on public record is now behind paywalls, and so that is a dynamic that we should be aware of, because that's probably runs counter to the core of our mission at GRI.
And there's one more point that I would probably make. In the reports we looked at, and there was information in item 6 about those reports, but they were larger organizations that we chose to review, and most of them were listed. They had very little in their actual sustainability report, and all of them did have a report, a separate report, to meet the GRI disclosures. They referred to their website, to other documents, so you didn't really get this information in the sustainability report, or whatever they called it.
Okay, anything else on this point? Yes, Jennifer.
I'm looking at the words sectors and activities, and the guidance that is listed talks about the total number of operations. Do we have operations defined? That's is that facilities with operations, sites?
Yeah, so currently we don't have a formal definition for operations. It was one of those ones where it was assumed that people would take it and interpret it accordingly. But in the existing guidance in 102, it does talk about operations. And so you're right, we will need to carefully consider where we don't currently have a definition, whether we choose to come up with a formal definition or we provide guidance that really goes to the heart of what we're asking you to describe. If you don't have products, well, you know, you've nothing to describe, but you can describe your services.
Or your operations as you commonly count them. Yeah.
Okay. I think maybe we can move on to the next one.
Okay, employee and worker related disclosure. So we spent a lot of time looking at this because this is one where we know we receive a lot of technical inquiries about a host of things in here. Out of the 45 reports we looked at, only one complied with every aspect. And many didn't comply with any of the elements, and let me explain why. B, C, and D, as they stand now, sometimes you would get very little. But A, which was originally 3 different disclosures, A, B, and C, and I've merged them all into sort of sub-disclosures in A now. The problem we saw was many organizations reported by gender total, by region total, by employment contract total, but not the second variable, if you understand me. So there were very few that captured all of these required quantitative disclosures in the reports we looked at, and we did ask stakeholders why this was the case. They said, yes, we have the information, but it isn't in a format where we can tag the different variables and produce it in the way that you require. We had some discussion internally in the standards division and also with the subcommittee about the possibility of simplifying this. So we would have employees by gender, employees by region, and we would ask for only by one variable. We decided not to do that because I don't think we had sufficient information to tell us that that was the right thing. And when we did speak with labour experts, they felt that this was important and there was a reason for asking for these 2 variables together because they do tell you quite different contextual information about an organization's employees. So at the moment we have suggested a couple of changes. I wouldn't deem C as significant. It's just more of a refocus on, you know, tell us about significant variations and describe them. And then in the guidance we would look to provide examples such as seasonal workers. So it's really cleaning up that. We don't usually include examples in disclosures. And then D was pointing out a couple of things that it would be useful to know rather than just tell us how the data have been compiled. This is another one where we really felt there was little information. There are just the numbers. You don't understand the basis in which they have compiled the quantitative information particularly. So we wanted to bring out some of the things that it would be useful for a reader to understand when they've done the calculations. So my question is, does the GSSB agree with the changes above? And do you see any merit in convening a small expert group, particularly to focus on what is now in Disclosure A?
It's Michel. May I come in here?
I'll do Peter first, and then it's your turn, Michel.
Okay.
Yeah, thank you. Obviously, an area of significant interest for me. With the shift towards integrating human rights impacts more obviously, the merit of this particular data becomes more obvious in a way. I think people used to question it more, but when there's now a greater understanding of human rights impacts, the issue about your employment practices becomes much more obvious, and I think there should be even less resistance to it for most organisations. Who you employ, how you employ them, how you treat them is one of your most significant impacts. And clearly to know whether your impacts are good or negative, you need to have some ability to quantify who or what you're dealing with. So being able to actually have the records and systems in place to collect this data, to be able to release it, is obviously a key way in which you're managing your impacts. So I support this these revisions. With respect to convening a small expert group, we can do that. I'm not sure it's necessary, but I'm happy to go along with it.
Michel.
Yes, I just wanted to mention that there is another dimension on which we are very often asked to report on, and it's by age category. And when you combine all those, it becomes a very complicated report.
Vincent?
Yes, maybe my question is just ignorant. So I'm just not sure the definition of full-time equivalent. Is there any relationship between full-time equivalent FTE and the employment contract or employment type?
So the full-time, part-time, A3, is just that. How many do you have full-time, part-time? But when you're looking at 1 and 2, you will need a number. And there are various ways of doing that. You could do that by headcount, or you can do it by full-time equivalent. So D part 1 was to get them to articulate when they're using headcount and when they're using full-time equivalent, because it is not always obvious.
Corley.
I'm just curious why we are not asking for employment type by region as well. Is there any particular reason, or is this not something that companies commonly report on? In the relevance of local employment, you know, if you mostly employ people part-time in certain regions, is that important or interesting information to know, or not really?
I cannot answer why it is not there. I know why the ones that are there. So forgive me, but I can't answer why that one was neglected. Bastian may know.
Institutional knowledge. Well, at the time there was a discussion, and it was felt that it was already a stretch to combine 2 observations, 2 characteristics, and that one was dropped. Also based on public comment feedback. Whether that was a good reason or not, I think we changed the disclosure at the time considerably, with more characteristics being added, and there was a threshold where people said, well, let's go only so far. I think that's the natural dynamic. There was very many of these disclosures that change over time.
Sorry, can I just, on that, I mean, that may be something to look at when you do this research, and the other thought was, you know, whether to make provision for any other categories that may be significant. So race, for example, which is critical in a country like South Africa, and which is required by law for them to be disclosed. But it may not be something that everybody needs to disclose. So some flexibility there might be interesting to consider.
Okay, I've got Robin and Kent and Evan.
Yes, just to follow on from what Peter and Corley are saying about particularly maybe to have a small group that looks at in view of the human rights agenda, and particularly if we've had 45 reporters and only one that could fulfill all of those at the moment, and those disclosures have been out there for a while, would imply that there's something challenging there or not working well. I think it would be also good to have a look at B as well as part of that scope, because that's been there a while as well, and it doesn't imply any sort of necessarily a quantitative response at the moment, and maybe it should. I don't know, but I'm thinking of some sectors where very significant amounts of work are done by large contracting organisations and who are probably reporters in their own right. But I think that relationship could be explored a bit further through opening up B as part of that review as well.
I'm just following up on Corley's point. I assumed, probably incorrectly, that the reason why we didn't break down employment type by region was because regional variations exist in how we define part-time and full-time. It's not a cut and dry 30-hour distinction in every region.
Well, just to respond to that, that probably was also part of the discussion, but you have to somehow then decide for the organization, and that's one of the feedbacks that we have on this disclosure, how you deal with full-time and part-time and actually make an assumption for the global, because you still have to report that. But that was, I think that's one of the biggest struggles, because sometimes there are legal definitions of these terms, and when you roll this up, you lose that nuance, and that's something that is played back to us in the technical inquiries.
Loredana, and then Peter.
Yeah, just following up on Robin's proposal concerning the inclusion of B into the scope of the small expert group, I would support that. And actually, my question was regarding B. Well, please excuse my ignorance. I'm still very new to the process. So, what is a significant portion of non-employees? What would we consider significant? I mean, considering the growing importance of non-state and forms of employment in the world right now. Thank you.
I think you might have hit the nail on the head there. It's very subjective, and so an organisation is expected to determine what is significant. The other feedback we had as well is, well, if I have one region where it's significant, is that sufficiently significant across all of my sites? So that was another dimension that they struggled with too, which I can understand. You asking for global significance or local significance?
Yes, well, I suppose the work around B is a good reason to have a labour, have a small expert group to look at this. I'm thinking of well, 3 big mining companies, all report differently on this issue. And I have had a look at it recently. BHP reports number of employees and number of contractors or people that are indirectly employed by the company on its sites. Rio Tinto only reports employees, but their OHS data includes contractors. So clearly they know how many contractors they have, but they're not reporting it. And thirdly, Glencore lists a single numbers for employees plus contractors. So they do know their entire numbers, but they're not providing the breakdown between employees and contractors. So that's 3 big mining companies doing it quite different ways. And they all say they're GRI full reporters.
Yeah, Bastian.
So if we go ahead and decide that an expert group should be looking at this, I think it would be interesting to declinate through these type of parameters for their discussion, because one thing we're arriving at, we have a disclosure that has emerged out of 20 years of GRI history. For some of the things, we don't have quite clear why they exist and why they were asked at the time. And what that committee could rationalize for us is we were asking for this specific number, and here's the reason why. Example from Peter, well, we have to just normalize and standardize the way you provide this information and what's actually the decision useful element or breakdown that we need to get after. I think that would be helpful, and giving them a very confined mandate around those things. That I think from our perspective at the Standards Division would be helpful.
Okay. I mean, I think this information is surprisingly complex, isn't it? And the more that we look at it, the more we can sort of pull out about what might need to be rethought in this area. And of course, the sort of creation of jobs and so forth is one of the things that companies want to be able to disclose. They want to be able to talk about key economic impacts, key people impacts, and we require a consistent methodology for doing that and for creating transparency around it. So I think you're hearing consensus here pretty much for a small expert group on this topic. Yeah. What's next?
So, following on the same theme, we have collective bargaining agreements. This is strange because I have not put up a revision here. So we did spend quite a lot of time looking into this. It is one that produces a number of inquiries, and mainly the inquiries are along the lines of, I cannot get the 1%. So I have most of the information, but not all of it. So I just can't go, the extra mile to get the 1%. It did lead us to think, if somebody writes 0, 50, 100%, they've complied, but what does that really tell you in terms of a user of that information without any other context? So 0 might be appropriate in a certain geography, in a certain industry, and it may not be appropriate in a different industry, in a different geography. So we did think about potentially adding narrative information into it, but again, we didn't have sufficient feedback or expertise to determine what that was and whether that goes alongside a quantitative disclosure or potentially replaces it. So I think this is one where I would like to understand if the GSSB determines that this is something we can continue to require as a general disclosure, information about collective bargaining agreements. It did move in G4 from elsewhere to become a general disclosure. And whether asking for 1% is appropriate. If not, then I think this would be an extension of the labour expert group that we have just determined we would like to convene.
Okay, can I ask a clarification, Sarah Jane? You had said that we have limited reporting against this because in the first instance you said that reporters often have some of the information but they don't have all of it. But then you also introduced the idea of whether or not a percentage actually tells you anything meaningful without narrative. To the latter point, I would say there's absolutely nothing that restrains a reporter from giving narrative and context, so I'm not sure that the thing is broken for, on that side. But as far as the former point, the sort of, we have some of it, we don't have all of it. Do we have an idea of what the nature of that is, to give the GSSB a little bit more of an idea of what the issue is here? Like what do they tend to have and not have out of this information?
Yeah, so sometimes they will provide narrative information which says that we do not restrict employees from participating in collective bargaining agreements. Sometimes they will talk about unions, but not really talk about whether there is a collective bargaining agreement associated with the members of that union. Interestingly, it's a shame Kirsten isn't here because we had a discussion yesterday where across the 200 sites in her organization, she doesn't have the quantitative information at a global level to provide 1%. So what they do as an alternative proxy is describe which sites have collective bargaining agreements. And I tried to drill as to why was it difficult, and it was just the sheer number of sites, employees. You know that not 100% are covered by the agreement, so therefore you need to find the exact number in order to come up with the overall percentage. And so I think it's around, chasing down individual numbers to arrive at that 1%.
In the first couple of examples that you gave, you said that some reports talk about they refer to unions. They don't necessarily refer to collective bargaining agreements and so forth. I'm not sure if that if that describes an organization that doesn't have the information so much as one that just doesn't choose to report it. So there might be a couple of different, I understand what you're saying about Kirsten's situation, that it's just, there's so much that it would be very difficult to track down that information in this sort of a format. But I feel like we need a bit more clarity about what the nature of the problem is here. I see Evan would like to make a comment.
I agree entirely with what you just said. For U.S. companies, I feel like this is worded exactly right. You get exactly what the minimum disclosure that they're prepared to give, and they don't want to give any more context than that. And I think it has more to do with what they want to report coming through the GC's office or whatever, rather than having an overabundance of information. So I think that I wouldn't tinker with this too much in terms of U.S. company take-up. I get asked about this question quite a bit, and it seems to be like the maximum they're willing to go in terms of the public disclosure on this topic.
Gustavo.
Yeah, thanks. The first impression is that the location about this disclosure is quite not comfortable. It's because it's in the stakeholder engagement, and seeing the order that it comes, I see that it could be added to the 1028 as a point E, for example. And I feel that the company, yes, it's comfortable to report the number, the percentage, and sometimes some companies needs to talk more about the union relationships, because sometimes it's like a key relationship. So I could think that we can, in the other side that Evan says, to keep the percentage and add some narrative relationship with unions and collective relationship. Yeah. But the first is about the location. Is the closure. I feel is like not very comfortable there. Should be with the one before or in the employment specific topic.
I think just one more historical context addition to the discussion is, I think at the time it was assumed that when we say collective bargaining agreement, that there was a good understanding of what is the reference, right? In the technical inquiries and in the discussions, I think one thing we see is that this is either intentionally or not, but it is not understood, the concept, or at least that is played back. So the question for a committee could also be how we can define this better, and how we can work with labor experts to make crystal clear what conceptually we are referring to. I think also in relation to the 10 languages in which we translate, I think that is important, and I know that as part of the ILO's work, among others, there has been substantive work on definitions around what this actually means, but we're not making strong references to that body of work, which is translated in very many languages as well.
Peter.
Thank you. Yes, the point that Bastian brings up is highly pertinent, but it shows that this quite simple disclosure serves a multitude of purposes. It's obviously an aspect around managing human rights impacts, because freedom of association and right to collectively bargain are a key human right, and one which is clearly of importance to all reporting organisations that employ people. And so firstly, it was in a way a proxy for human rights disclosures, and it still is. The fact that a lot of reporters don't understand, or don't have a clear understanding what collective bargaining agreements are, means that perhaps they're not doing the self-education that they should have as part of being a GRI reporter around understanding fundamental human rights. Thirdly, it's actually also a proxy for governance structures, because every organisation that is an employer should be able to, this come up in the subcommittee, should be able to should have an understanding of on what legal basis they're paying someone. Obviously, you've got to check that you're paying at least a legal minimum wage. There might be an individual contract, there might be a collective agreement, there might be some other legal form, but your payroll system should be able to disclose to you the basis on which you're employing someone, So you're covering those bases. And if someone is employed via a collective bargaining agreement, that should be in the payroll systems, and you should be able to come up with a number, not necessarily exact to the last individual, but you should have a very good idea, and you should be able to disclose a percentage. So it's this simple indicator does actually serve a multitude of purposes in this area.
If I can sort of summarize what I think I'm hearing, I'm not sure that there's that we've come to anything around any changes to this disclosure that may or may not be required. But I think we may be feeling like it is worthwhile to have the same subgroup sort of study this and provide a rationale at minimum, and maybe look into whether there is something that could be improved about this disclosure. Does that sound fair to the group? Okay. All right. Thank you.
Content index. Again, this is something that results in a number of inquiries. I think just by the nature of the amount of information that we ask for to be included in the content index, and it is comprehensive. We considered what the purpose of the content index is. Do we still need it? Interesting feedback we received from users of sustainability reporting was that individual users, they don't use the content index quite as much as maybe we thought they did. They read the report, and whatever is in there, and they use it. But certainly we are aware that all the rating agencies, for investment purposes, this would be the way that they navigate. And from our perspective too, in understanding what is in a report, the topics that have been reported, certainly it's something that we would wish to retain. So then the question came, do we need to include all of the elements that we have? Is there any way that we could potentially simplify it? We ultimately resulted in no, and ended up with a couple of recommendations where we might even want to add to it. So one thing that is becoming more of a challenge is organizations not necessarily indicating the exact title of topic specific standards they've used. And as we continue to update in our modular system, this is quite important to understand, was it the earlier version when the standards were developed in 2016, or is it being a 2018 version? Had a lot of questions on that, so I feel that that needs to be elevated into the actual reporting requirements rather than being a compilation instruction as such. The other change that we are proposing here is to include any additional material topics not covered by topic-specific GRI standards. So Management Approach 103 should be applied to any material topic, regardless of whether a GRI standard exists to address that topic. So that is specifying that. And what we haven't done is included a requirement to include disclosure labels. And what I mean by that is where you actually report the information, wherever it may be in the report, that it is tagged or in some way labeled to say this is the information for 1028, for instance. And this is something that certainly the GRI services team encourage organizations to do, because it makes it a whole lot simpler. Even when you refer from the content index to a page or a section, you're hunting for that specific disclosure information. So this is something that we would encourage, and I would be interested to see if anyone believes that this should be a requirement or a recommendation.
Any thoughts on this? I can imagine this being, I don't know if it would be welcomed with open arms by reporters if it were made a requirement, simply because it sort of, in a way, it might tend to litter the page with sort of numbers and letters and things that a lot of people sort of resist. But but I can't. I mean, as a sort of user of reports, reader of reports, you know, obviously the just the sort of location of the page doesn't necessarily actually tell you where the specific disclosure is, and can bury it, in fact, and can sort of bury a lack of reporting with the appearance of compliance with the framework. So it's sort of this is one of these we have to decide, I think, how far we want to go with this as far as requirements are concerned. Evan. Yeah.
I mean, to Bastian's point earlier, I think there is a movement to sort of become more obscure, more of this stuff that seems like it's obvious and findable is behind paywalls and things like that. Anything we can do to make the process of finding data in the report will probably be a good thing. But I agree with Judy. I think for practical purposes, if we start littering the standards with all kinds of very particular requirements, you're going to have a slight drop off in participation. So it may be a bitter pill that we have to swallow. But as somebody who's tried to find, I usually don't even use the content index. I'm trying to find something in the report. I'll go by the heading in the report itself, because often the page numbers themselves are not even accurate. The document's been reflowed or re-edited or whatever. Or you're trying to interpret a paragraph and see how that actually answers any of these particular concerns.
Looked like you wanted to say something.
I think if we move in the direction of recommending, requiring a labeling of the contents within the report, I think we are still, also in this discussion, very much focused on the paper-based or PDF-based type of report, while this is changing rapidly. So I think labeling information, maybe there's a more generic point about that individual elements, so on the disclosure level, need to be identifiable for the user of the information. Because if we read the trends right, we're only a couple of years away from what happened now in financial reporting, where the financial report is still issued oftentimes also as a PDF type document, but in actual fact, how it gets used is through XBRL or XML enabled data feeds, where that labeling is actually absolutely essential. It's almost, well, it's definitely useless without it. So maybe there is something we can look into here, where we say there is about actually clearly identifying the content elements in relation to the structure that GRI is providing with the standards.
Gustavo and then Corley.
Yeah, I want to read with this inclusion, because it's already in use in the contact index service. It's already, you have to put this kind of labels. So I think that, yes, of course, it can be a challenge, as you said, but it's like moving to making better the identification of the disclosures. I think it's great. It could going to be a good challenge, but I think it's a good idea.
Yeah, I think it's a good recommendation to give, but I don't think it should be a requirement. I mean, we already see reports where companies have an icon for each strategic objective, an icon for each material issue, and then, you know, they add the SDGs, so you have a little paragraph that has so many icons you can't keep track of, and then for the 6 capitals and integrated reports also. So it can be a little bit confusing, and I think to make it a requirement is a little bit of, you know, form over substance, which is not ideal. I think the recommendation can include, you know, suggestions around use of technology. So, you know, if you click through from the content index, it takes you straight to the place in the text. I don't think that's impossible in HTML versions and so on. So the question I have is around C1. What is the number of the disclosure? So is that 10255, or so why don't you just combine B and C1, the number of the disclosure and the title?
So
Just
it's the
simplify
GRI
language.
standard, like 201 economic performance, but then within that you will have individual disclosures. So that's the difference between B and C, and it may be that you haven't covered all the disclosures on the existing model. With the core reporting, you know, you don't have to cover all of the topic specific disclosures. So that was the reason for differentiating B and C. One is the title of the
Okay.
standard and one is the disclosures.
I'll have to read a report because it's not very clear to me, but I'm sure of a guide.
I think there's also the possibility that reporters may not be using the most recent version of a standard all the time. They may be implementing as new standards are introduced. They may be at a different stage of implementing them. So you might be using a certain standard from 2016 and another one from 2019, and even if there is a 2019 one that's been issued, you may not yet be using it. So I think that's the point of B more than C, and C is more the individual disclosure from within any given standard. Yeah. Peter.
I suppose just a request to Sarah Jane. The GRI content index is meant to be something which points you to where you can find the information, either in the sustainability report or elsewhere. But I've noticed in a few GRI content indexes that sometimes it's the only place where certain information is disclosed. So it's supposed to be pointing you where it's reported, but sometimes it's only in the GRI content index. I found that quite strange.
Yeah, certainly that's something we've noted, and particularly things like 102.41, that percentage, you often see that in there because they don't see it sits anywhere else and they just want to address the disclosure. I mean, as far as I'm aware, there is nothing in our standards, guidance, disclosures that prohibits such a practice. We don't encourage it, but as far as I'm aware, we don't prohibit it. But based on the feedback we had from users who maybe aren't even bothering to go to the content index, it's often a separate document now in their website because it's used as, this is where you would go to navigate, but I guess if you don't search for it and you go straight to the PDF report, you will never find it. It's often at the end. So I can see why it is perhaps not being used as much as we felt it might be.
Okay. Have we resolved the question here then, Sarah Jane? How shall I summarize what we've been discussing? Yeah, we have. Yeah, I'm not sure we've 100% answered it. The question. Have you got enough though to go on?
I think there's some merit in investigating perhaps a recommendation. And Gustavo's right, it's something that we offer through our services to really make it clear what you're disclosing and which part of which standard it's addressing. So I think perhaps, and we'll come on to further stakeholder engagement based on the recommendations we're presenting, that it's something that we could road test perhaps to get an understanding of how that would be received and whether it might be useful to report users.
Just to add to that, I think this is a good example for an addition that we could write into a public comment draft and ask a specific question around, in particular to users, because the argumentation from a reporting organization to say, well, this a requirement to label would actually somehow dilute the accessibility and everything. That's a real thing. We have that feedback during the service provision, but there might be actually a very much increased utility of the whole exercise from a data user side. So I think to ask a pinpointed question around that the GSB is considering to introduce such a label, either recommendation or requirement, that's an opportunity that we have with the public consultation.
Please go ahead.
Okay, the next one is external assurance, and the one amendment here that we have recommended is as part of understanding the practice of the organization with respect to seeking external assurance is for them to provide more information about the basis. And what is meant by the basis is the scope of the assurance? So is it a handful of indicators? Is it specific operations that they have assurance on? Do they use a rolling basis for different, subject matter? And also the level of assurance, so limited versus reasonable. And the reason for including this in A was because in B this is not captured. You will just have the report and whatever has been assured, but there isn't a description of the understanding of the basis for choosing those indicators per se, if it's not the entire report. So my question to the GSSB, is this something that would be of use to have more information behind the decision for the scope of any external assurance?
I think that's probably a good idea. I mean, in general, you can actually go to the auditor's report. You can find out what the scope is. And I guess it's a question of how sophisticated we think the users are of these reports, whether they do that or not. I have a kind of a feeling people in general don't. Now, being an accountant, I always go look at it carefully, but it might be better to actually put it somewhere else so they don't have to go to the auditor's report to discover that.
Evan?
I'm always looking for ways to simplify. This may be one where less may be more. I mean, couldn't this simply be a description of the organization's policy, practice, and scope with regard to seeking external assurance for the report? I mean, we don't need 3 sentences to describe one thing.
Michel here, may I come in?
Yes, please.
I just wanted to comment that as people move more and more to online reports, auditors' reports become more and more sophisticated and more precise in the description of what has been audited or not, just because, well, when it's online, they have to be very precise because online information may change after the auditor's report. When it's paper, they can just mention pages or something like that, but in our case, we see that now the auditor's report has nearly a full page about what has been audited or not.
I'm not sensing a lot of energy around this question, and it's possibly because actually, if you open one thing around assurance, you might find yourself having a very long conversation about the entire practice with respect to sustainability reporting, which I personally feel like we should have that conversation at some point, but that's not what has been requested of the technical committee here. I'm not sure it would be very helpful to go very far with that. Is it your sense, Sarah Jane, that there is something fundamental that is not being properly disclosed about the basis for the scope of external assurance, generally speaking, and is there a simple way of adding it that is either exactly what's been proposed here or perhaps something different?
I mean, the alternative is we could amend the guidance without changing the reporting requirements to articulate. I think there is some challenge with navigating external assurance reports in their current formats to really find out the scope of the assurance, and perhaps this is an attempt to make up for that, and whether that's the right thing to do or not is questionable because that is outside of our remit, really. So.
Yeah, just to add to this, and Sarah Jane is directly involved in that project, the IAASB has a project underway for guidance on for the industry, basically, and it includes right now discussions on how the future external assurance report should be structured. Among other things, these type of considerations, so a third-party opinion on whether the basis or the scope for the assurance engagement is actually the right one to start with, that is also part of the debate. But it is a very long process, and I don't think there is anything in sight. So hopefully, if we continue in the same timeline that we're on right now, we will be out of the gate with whatever we have to issue before this other thing sees daylight. But maybe that is a discussion we can also bring back to those people involved in the IAASB process, whether they anticipate that there will be more guidance, because it would be good to reference something. And I think the idea behind our reference to external assurance was always that we were hoping that the industry comes together behind one standardized approach and an agreement what quality actually criteria they want to put in as a minimum threshold for engaging on these type of things.
Yeah, I think this warrants discussion in some other forum. It's a complicated question because it's, what's the industry? The industry is accounting firms and engineering firms and whatever, and they all do sort of different things. When I read those reports, they could look the accounting ones tend to look similar because they're subject to certain standards, but the other ones can be kind of all over the map. I was looking at the CDP, and where you talk about reasonable versus limited in CDP, they have like 6 possibilities. So it's not, they don't just say reasonable or limited, they give you a whole lot of things. And so this is an area that really has not been kind of defined in a good way. And so yeah, there's more work for someone to do on it. The problem is, if it is the accountants that do it, then that doesn't apply to the engineers and their reports. So I don't know, it's just kind of a difficult area.
Just one. So the IAASB has explicitly stated that what they want to come up with actually includes also the non-accountants.
Oh, okay.
Having said that, of course, directionally, the discussion is led by accountants, and a lot of what we see has resemblance with what is happening on the national level implementation. But it is a space to be looked at for us. So I think.
Yeah, just a technical point. To use the IAASB guidance, you don't need to be a practicing accountant. Whereas I know in the US, to use the AICPA attestation standards, you have to be a CPA, and there lies the difference. But in terms of the working group, it doesn't have a whole lot of non-accountants on it, so it's still accountant focused.
Okay, I think we're moving on from this one. Yeah.
Okay, this is a question about, again, doing further work and having a work stream. So there are extensive governance-related disclosures. We have not proposed to change the content of any of them. We have done some consolidation where we thought that was appropriate, that rather than having 2 things about executive remuneration ratio to average pay, put them together in one disclosure, so where we saw some easy wins. Now, a lot of the governance disclosures were developed during G4, and that's where most of them do come from. We didn't feel in the standards division that we had sufficient governance-related expertise to be proposing revisions to the actual disclosures. So this, again, is another question to the GSSB. Is this something we wish to open up or not? And then I can take that forward in the standards division.
So I've got a question about this, which is because, as you've identified here, there's been limited feedback on it. I'd like to know why there would be identified a need to have a sort of governance expert review here. What problem has been identified, if any? For the sake of sort of keeping focused with the resources and everything, why would we suggest opening up the possibility of changes without, a kind of, evidence that might be needed?
When I say limited feedback, it's not something we asked direct questions about in the survey, for instance, but certainly when it came to stakeholder interviews, expert interviews, it always arose as there are too many. They're too extensive, and we've rationalized them down to 20, but I think there are 30 individually as they exist at the moment. So it just felt that it was too much, and what were the really, really fundamental ones? A At the moment, you are only required to disclose them if you're doing a comprehensive report, and we know that very few, I think it was 13%, is it, based on the stats I looked at, are comprehensive reporters. Now, that's a bit disingenuous because some of the core reporters do the easier ones. So there are some common governance disclosures we see in all types of in accordance reports, but there are very few who go through all of the governance disclosures. And so if we really want to drive the right type of governance disclosure, perhaps there is some rationalization to prompt reporters to do the governance reporting. And when I say limited feedback, I didn't have any steer on what to drop, what to change. So that's why I am asking whether this is something to pursue or not.
I mean, like with some of the employee sort of data that we were discussing before, I wonder again if this isn't just reluctance to share that information, because it is challenging, but it's also, you know, there's a certain value judgment behind a lot of that data, and I think a number of reporters just don't find it to be in their interests to disclose it. And personally, I'm sort of, I don't know if rationalizing the disclosures would then actually drive the reporting that we want to seek so much as just reduce the, you know, the sort of the expectation that there is transparency around this. But I suppose without the information around that, we can't really make that decision. And maybe the question is, do we want to open that up? Do we want to find out more?
Just one addition to the discussion. I think what you see is, yes, there are very many disclosures, at least comparably, and currently they're behind that threshold of comprehensive. Although, of course, there is a possibility for core reporters or any type of reporter to pick them up. But when you compare the number of disclosures that we ask to any of the methodologies that are with ESG data providers, then we are actually very focused on the governance section. It can be easily hundreds of breakdowns of different things that are asked in relation to governance proceedings. We don't go into the detail of how certain decisions have come about and all these things. We've tried to tag it at the time to the governance codes that were emerging on a national level in very many countries, and we arguably didn't go very much deeper or beyond what was already codified there. But across the board, I think there is an observation about governance disclosure that it is while it is a reference in ESG and as I think oftentimes also described as a starting point, certainly for investors to look at organizations, it is not very mature across the board. I think very few organizations disclose detailed information on this. And yeah, so I think that's just the lay of the land. But what I would confirm from standards division perspective, we just don't have the expertise in-house to move any further with this, other than consolidating some of the disclosures as Sarah Jane has explained.
Okay, can I invite some comments then, Robin?
Yeah, I would support having a small group look at it with a quite tight scope. I agree that there's a perception that there's a lot of them and it is influenced by comprehensive versus core requirements. Also, the amount of shifting that's occurred since these were adopted as well, so the G part of ESG, but also what's occurred at different sort of national jurisdictions in terms of either guidance or mandatory disclosures now on governance issues and things around bribery and corruption. So there's been a fair bit of shifting of some of these disclosures since these were first put in. So I think if the choice is doing something within the standards division that's just a rationalisation exercise versus having a small group with a tight scope, look at the integrity of the disclosures and what's driving them and what the real purpose is, I think I prefer, you know, it would be good to have a small group of experts look at that, hopefully with a view to maybe rationalising at the same time, if that's not too much to ask.
Anyone else? Yeah, Corley.
Yeah, I'm intrigued by this, but I mean, I come from an environment where companies issue separate governance reports covering a lot more than this, and it's not something that gets questioned. But I do think there's value, particularly in considering, which governance disclosures are relevant to the sustainability report, and which ones are just simply, there because it's the typical things that you report under governance, and maybe limit them to the really key stuff. And some of them could be consolidated into things like organizational profile and so on. So yeah, I would support just some thinking about that. I don't necessarily think it needs to be an extensive exercise. Tight group of people with a few conference calls maybe.
Yeah, certainly many of the governance disclosures are very aligned to sustainability matters. So it's asking about how economic, social, environmental topics are considered by committees and things. So it is very focused on the content of our report rather than being a wider understanding of governance that you would have in governance codes. And then I think where there are things like, ratio of executive pay to average pay, that provides you information, contextual information, I guess.
And I think those things are important to note. I also mean, I'm sure that you may be aware of this already, but ISO is developing a guidance on governance. It may be useful to, not sure what the timeline is in terms of finalizing that. I know these things take longer than anticipated, but it may be, worth waiting to see what comes out of that process and trying to align with that in some way if there is value.
I have a little concern about opening a can of worms, and not quite knowing what we're going to find ourselves with all of this. So, I mean, maybe it's worth our just sort of exploring in the future what would be the terms of reference really for this further engagement with experts, and that reflects the fact that yes, in fact, there is indeed the ISO is looking at this issue, but beyond that, the whole sort of orientation around governance among investors, among other people, but clearly among investors, has really taken off. And would we be open to actually a potentially much greater impact on the standards than we have imagined at this point, especially in response to limited feedback? If it's sort of if we aren't facing calls from reporters or users or whatever saying this is not working, do we actually want to find ourselves in a position of sort of having opened a process and then we oblige ourselves to commit resources to something that actually would, might not really be that important in the grand scheme of things? Should we just maybe just take care to think about this carefully, so that we don't sort of blunder into a situation like that?
So I think the standards division is certainly very happy to maybe not open the can of worms here.
Yes.
But what I would propose, and that is something we discussed in the team, we will get, and we have done that in the background already, in touch with some of the experts that were involved in the process in 2013, 2014, that are close to the intent of the disclosures that have been, just to basically go back to them and ask, so do you see fundamental changes in what you would ask for now as opposed to a couple of years ago? That's then still not to say that we have to open it now, but one of the dynamics, and we'll come to that in the next session, is these contents that are currently hidden behind the comprehensive notion.
Aware of this.
No. But I think one reason that we don't have much feedback on this content could sort of be most people don't know that GI has contents on governance to start with, and actually very elaborate and probably very specific contents that no other framework certainly is providing. The other thing, most of the reporters themselves, they don't actually ever get to look at them, because the way they approach this section of GI is what are we shooting for? It is core, so let's disregard all these disclosures. And I think that's the reality that we have to. So we will do a background conversation or two with experts on this. I've reached out to ICGN on this, and we see what they play back to us, and we can information, inform you as part of the upcoming meetings.
Okay, is everybody happy to move on? Okay.
I think I was really going to echo the points made by you, Judy, and Bastian, and the murmur that went around the room when we said maybe this is opening up a can of worms in terms of it being a significant project on top of everything else we're doing here, and if there's not a large demand for the change, then perhaps we shouldn't open up that can of worms. I think the way Bastian suggested is perhaps the way we can put this to bed for the moment, given that we've got enough other work in this Universal Standards Review to do.
Okay, so please put the can of worms to bed for the moment, if you don't mind.
Oh, okay. We're coming towards the end, you'll be pleased to know. So there were some disclosures that we were proposing to remove. And already in the subcommittee we had discussions particularly around 102.13 and membership of associations. So that is one that I specifically would invite any comment on. If I go through the others, 102.15, I've had some feedback on not being overly satisfied about removing this one, but the rationale for removing this one was it almost duplicated information that ought to be disclosed elsewhere. So particularly now we are proposing revisions to the management approach, and more disclosure around how you identified your material topics. I think this would be addressed. So that was the rationale behind that one. 51, date of most recent report. I'm not sure that that provided a whole lot of useful information, given that this day and age most of our reporters have the whole list of reports sustainability disclosure database. So again, we felt that it was a bit superfluous and is not really a requirement for a report to add in a contact. So I think the discussion I would encourage is around 102.13.
Kent and Evan and Corley.
Yeah, I strongly disagree with the removal of 102.13. I don't agree that this information is publicly available, easily publicly available elsewhere. I think that this is sometimes really informative when you're trying to figure out how a company is maybe disclosing on one hand and lobbying on the other hand, or through associations, maybe working at contra purposes to some of the ESG things we're working towards. So I don't know what the rationale would be for removing it. I don't think it's too difficult or burdensome for companies to comply with, and I also don't think that this information is really that easy to find.
Yeah, I agree with what Evan is saying about 102.13 and about 102.53. Minor point, but I mean, my understanding of supplying a contact point is not for GRI, but for anyone who reads the report. So it may not necessarily need to be a requirement, but you know, it could just be a guidance point just to make sure that if anyone has questions that they know who to contact. It could potentially be removed because I think companies probably publish something like this in any event, but I wouldn't lose the concept completely, so maybe in guidance somewhere it can be retained.
Yeah, for the number 13, of course, I agree with them and Collie. It's something easy to accomplish and is interesting. About the number 15, I understand that in the management approach is going to talk about risk, about that topic. Somehow I see that the companies use the 15 to about risk, about opportunities, about the whole business, the whole company. So I think it's something interesting. We can found it in the 14, but I think it could be interesting to keep it in somewhere about the risks and opportunities of the whole business. And for number 53, I agree. It seems to be not so important, but in somehow it's is like to give the message to the stakeholders to be open to dialogue, to talk and to engage. It's like a message. Sometimes I feel that it's not so useful, but it's like the message. And about the recitation report system, I have to say that all data partners around the world have to collect the reports and to put some contact to GRI to make contact. But sometimes that email is the only thing that you have from that company. So it's like thinking about the users of that report, GRI is the first user and is like quite important, that email.
Can I ask about 10251, the date of most recent report? Is that not, can we not sort of more simply call that the publication date? Is that correct? Is that what's meant by that?
As I understand it, it's the last.
Or the previous?
Yeah.
The previous report. I see.
Because they often don't have a publication date in their report. It's just whenever they release it, this is the information for calendar year 2019.
Yeah.
And I don't see it something existing in other reporting frameworks. So for me,
well, there are lots of, for example, the UK Modern Slavery Act requires reporting by a certain date every year. And it needs to be labeled as such. And I would have thought that for the rating agencies, for example, it's actually pretty important if people are going to be sort of evaluating and using data in reports to know whether or not they've got the most recent, and having a sort of a clear publication date facilitates that.
Yeah.
But I don't know if that's what
so
I'm
the
looking
actual,
at here.
Yeah, the actual disclosure is, if applicable, the date of the most recent previous report.
Yeah. Okay. Right.
And I think so. The dynamic why this disclosure exists is at the time, especially in the early stages of reporting, what you saw is the moment a new report was released, all the history disappeared. And there was like, and it is really this thing about, well, there was a target in year X, and then the next report there's a different target, and there's no follow-up. There is a different way of flagging that up in the standards where it is said that you actually need to present this in context, and maybe actually this is where we need to be more explicit, that very many of these data points are not very useful without having comparison to earlier reporting periods. And maybe this is the place where we can make that point. But the historic, I think that was just a way of catching that dynamic of history disappearing from public record. And that is, I think, no longer really the case. But that explains the existence of this disclosure.
Okay, well, based on that explanation, that does feel a bit anachronistic to me. But some of these others, I mean, you've heard about membership of associations. I would agree with you, Sarah Jane, if reporters were conscientious and careful and transparent in their application of the management approach, that you would expect to find that information there. Yet one doesn't very often, and so it'd be a question for the GSSB as to whether we feel that we need to send that message that there is an expectation there. I might actually say the same about 10215, key impacts, risks, and opportunities. I mean, that should be part of the discussion of strategy. Is it? And would we feel that it would robustly be provided in discussion of strategy if it weren't enumerated in the core disclosures? Well, that would be a matter for the GSSB to decide whether or not that should be sort of up to the individual reporter, or whether it should be identified as something that really must be included in any usable sustainability reporting.
It's probably worth pointing out that 10215 is the only one up there that is required for comprehensive reporters only, and perhaps this is another reason why we don't see much reporting on it, because there's only a small subset of our reporters that would have to do it.
So to me, that's a slightly different question, and we're going to get to that question in a little bit, aren't we?
Yes.
So, My sense is that possibly with the exception of 10251, the date of most recent report, which does sort of sound like, you know, kind of a weird one that's left over, I'm not hearing a lot of consensus around the table with respect to the remaining ones here. Is that fair, members? You have, and I sort of feel like this one needs to go back to the standards division for a little bit of a rethink. Yeah?
Yep,
Okay.
we can do that.
We have, I believe, hit the end of this section of discussion. Is that correct? Yes. Yeah, good. Okay, which means that we have time for a break, as published in our agenda. Can we limit it to 15 minutes, please, and come back at 5:02? And we'll close the public meeting for 15 minutes and reconvene shortly. Thank you.